This video argues why Microsoft Corporation stock is a buy after the release of its fiscal 2025 third quarter earnings report. The key takeaways from this video are: Microsoft's FQ3 2025 earnings report shows a strong Rule of 40 score of 52, driven by 15% growth and a 37% net profit margin. I see good reasons for the score to further improve as its cloud segment grows at a rapid pace. I expect this segment to become its largest profit contributor in the near future and carry higher margins. In terms of valuation risks, benchmarking MSFT's PE ratio by the sector average is misleading because most companies in the sector do not pass the Rule of 40. MSFT FQ3, Rule of 40 score is 52. Microsoft Corporation stock's latest earnings report, ER, is the most important catalyst surrounding the stock right now. To wit, MSFT announced its ER for FQ3 2025 on April 30, 2025. The company delivered another consensus-beating quarter, as you can see from the following screenshot. The remainder of this article will take a closer look at the specific growth drivers, and you will see why they gave me more reasons to be optimistic for continued or even accelerated growth ahead. In particular, the growth from Intelligent Cloud, 35% on a constant currency basis, outpaced the overall growth of 15% on CC basis, reflecting its momentum on the AI front. As the contribution of its cloud-based revenue increases at rapid pace, I feel it makes good sense to review its ER from the framework of the so-called Rule of 40. For readers new to it, the following introduction should be sufficient. Wall Street Prep: the management teams of SaaS companies are often required to choose between rapid growth and expansion, or improving profitability, for which the Rule of 40 has become a practical framework to balance the two concepts. The Rule of 40, popularized by Brad Feld, states that a SaaS company's revenue growth rate plus profit margin should be equal to or exceed 40%. Thus, the Rule of 40 measures the balance between a SaaS company's growth rate and profitability. Profitability can be measured by a variety of metrics such as EBITDA margin, EBIT margin, etc. The further the metric goes down the income statement, the more stringent the rule becomes. In MSFT's case, it reported an EPS of $3.46 per share on total revenue of $70.07 billion this quarter, translating into a net profit margin of 36.9% as seen above. Combined with growth of 15% on CC basis, its Rule of 40 score is 51.9, comfortably exceeding the passing score of 40. Next, I will further explain the implication of such a score for its future return potential. MSFT FQ3 earnings. Strong growth drivers. To better contextualize the subsequent discussion, the next figure provides MSFT's scorecard over the past 10 years to provide a broader background. Here again, I computed the score as sum of A, its quarterly operating revenue growth, and B, its net profit margin. As seen, MSFT had reported a very consistent passing score in the past, even by the strength standard of net profit margin, illustrating the company's superb balance of growth and profit. Note the score computed above is also noticeably above its score from the previous quarter, 46.9. A closer look at its specific growth and profit drivers gave me confidence that such a robust score will continue in the years to come. As aforementioned, the overall growth is 15% on a CC basis for the quarter. The Intelligent Cloud segment was a significant driver of this growth, with revenue reaching $26.8 billion, a substantial 21% increase, 22% CC, as you can see from the following slide. This far outpaces its legacy productivity and business processes, where its Windows and Office suites reside, whose growth of 13% CC kept pace with the overall growth. While more personal computing, which has a stronger hardware flavor, reached $13.4 billion, a 7% growth in CC. Finally, also note that the total revenue from the cloud segment is already about to be on par with the productivity and business processes segment, $26.80 versus $29.9 billion this quarter. Looking forward, I expect the cloud segment to be the largest profit stream for the company soon. Also expect the cloud segment to carry higher profit margins for the company, thus further strengthening its Rule of 40 score. MSFT stock valuation. Many investors and analysts are concerned about MSFT's valuation ratios, for very good reasons. As an example, the next chart summarizes MSFT's valuation grade, and the overall grade is an off-putting D. Indeed, MSFT's valuation multiples are substantially higher than the sector median by a wide gap across the board. For its P/E ratio, of around 30x, is more than 50% above the sector median. Its EV/sales ratios, in the range of 10x to 11x, are about 300% higher than the sector's median. I certainly see a good amount of valuation risks here. But I think the valuation grade here overstates the risks. A better benchmark in my mind is to compare MSFT to other companies that have also demonstrated passing scores measured by the Rule of 40, rather than to the overall sector. Most of the companies in this sector do not pass the Rule of 40, as detailed next. Other risks and final thoughts. As you can see from the following chart, the average net profit margin for the overall sector is only 3.98% and the year revenue growth rate is only 5.81%. Thus, the average Rule of 40 score is a miserable 9.8 for the overall sector. As such, the average valuation of the overall sector serves as a poor benchmark for MSFT in my view. When benchmarked by other stocks that also pass the rule, for example, those studied in the following McKinsey report, MSFT's valuation is quite reasonable in my view. That's a staggeringly small number and a major missed opportunity. Data show that investors reward companies that are at or above the Rule of 40 with consistently higher enterprise value, EV, to revenue multiples. Moreover, the higher the number, the greater the gain. Top quartile SaaS companies generate nearly 3 times the multiples of those in the bottom exhibit. As seen, for SaaS companies that meet or exceed the rule, the overall EV/sales multiple is 12x and the multiple is as high as 22x for those in the top quartile. Under this context, MSFT's valuation is very reasonable. For instance, its EV/sales ratio is in the range of 10x-11x as just mentioned, compared to the overall average of the 12x EV/sales multiple analyzed in this report. The downside risks include macroeconomic risks, such as tariff rates, regulatory risks, competition intensification, et al. Thus, here I will refrain from repeating these generic risks and only limit myself to risks more specific to the analysis presented in this article. First, the Rule of 40 is a metric specifically designed for software business, especially SaaS businesses, software as a service. As aforementioned, MSFT has a segment, more personal computing, that is more hardware-oriented. Contribution from this segment is relatively small in the total mix if recall. The application of the rule is thus less than ideal in the case of MSFT but should still provide valid insights on a macroscopic level. Second, MSFT also reported aggressive CapEx spending this quarter with a primary focus to strengthen the infrastructure for its cloud and AI business. I expect such aggressive CapEx budgeting to continue in the near future. Even though they pave the way for long-term growth, and a large portion of the CapEx is indeed toward assets with long life cycle, they could lead to margin pressure in the near term and impact its Rule of 40 score. All told, my thesis is that the reward/risk ratio is very skewed and favorable given the update provided in MSFT's FQ3 earnings report. In particular, I keep seeing a superb balance of profit and growth judging by the Rule of 40. Moreover, I see good reasons for the score to further improve as its cloud-based revenues grow at a rapid pace. The positives are more than sufficient to counterbalance the downsides, such as high PE ratios. As such, I maintains my buy rating for the stock.